What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about on a daily basis, including money, investing, the stock market, the fourth stimulus package update, and the stimulus check update. If you haven't subscribed to our YouTube channel yet, make sure to click the subscribe button down below. It's completely free to do so. And remember that new videos come out here on our YouTube channel every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. And also, thanks for hitting the like button for us down below. Interest rates could be going up even faster than expected. The Fed has already raised interest rates one time this year by a quarter point, a quarter of a percent. They're expected to raise rates 6 more times this year. That's right, by a quarter percent more each time for a total of 7 times, which would be 1.75% total this year. However, the Fed is saying they might have to raise rates even faster to help curb inflation. Check this out.
The Fed chair, Kelly, said that nothing would stop the Fed from raising by 50 basis points in May if it indeed decided that it needed to do so. He's not saying for sure that that's what the Fed will do, but he's saying nothing will stop it. And he made clear the Fed would go to 50 basis point rate hikes if it needed to, as well as go above neutral. Here's what he said earlier in his speech.
If we conclude that it is appropriate to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings, we will do so. And if we determine that we need to tighten beyond common measures of neutral and into a more restrictive stance, we'll do that as well.
Not surprisingly, the probability of a 50 basis point rate hike as measured by Refinitiv surging to 65%. It was around 50% last Friday, and it is up quite a bit today. It seems to be becoming the odds-on bet, at least for the moment, of the market. And that was not all that the Fed chair said that was hawkish. He went on to say that there's a rising risk that long-term expectations, inflation expectations, could move higher. That's a key for the Federal Reserve to watch. If that gets unhinged, the Fed would certainly be concerned about that. He sees the Ukraine war potentially leading to more inflation, and also pointed to more COVID-related supply disruptions from China. So, Kelly, the only good thing the Fed chair said was that he didn't see a high chance of recession, and he thinks it's possible to get down to 2% inflation over 3 years. But mostly, he gave what I would call a consolidated hawkish speech today, which taking some of the highlights of his hawkishness last week and sort of putting them in bolder relief today, I'd say.
So, what exactly does this mean if you don't speak Federal Reserve language? Well, let me tell you. Federal Reserve Chairman Jerome Powell basically says inflation is much too high, and the Fed will take necessary steps to address inflation by raising interest rates. And this will affect the average everyday person. Most people, almost everybody. This is because if you pay interest on anything, like credit cards, home loans, if you're not locked in, let's start with credit cards. Your credit card interest rates are probably going to go up. If you carry a balance, they're probably going to start to go up. They probably already started to go up, okay? If you have anything that is not a locked-in rate that varies on interest rates, they have probably already started to go up a little bit, okay? But remember, they're going to go up. I mean, the Fed's planning on raising rates 6 more times this year by a quarter of a percentage this year, okay? And next year as well. We don't know how many times next year, but and they're possibly thinking about even raising rates at a faster rate this year because of how bad inflation is. I mean, remember that inflation was 7.9% last month in February, and we know how bad it is this month. It's probably going to we don't exactly know what the number is going to be, but I think everybody expects it to be worse here in March. So they're doing this to combat inflation. That's pretty much the main tool to combat inflation, along with helping the supply chain. But the problem is the pandemic is really exacerbating that the most. I mean, we look at computer chips and They're trying to create facilities for that here in the United States. It's just kind of one example. Yeah, yeah, I know it's a nightmare, right? Um, so, for example, if you have a home mortgage that is on an adjustable rate and it's adjusting anytime soon, that's going to start going up. Credit cards being the main one, those rates are going to start going up. If you have money in a savings account, though, at a bank, those are going to start paying more money. Okay, so if you have money that's paying you interest, those will start paying you more. But anything that you pay, um, on a loan that has an adjustable rate, you will start paying more on. What's interesting here is the government will start paying more money on its debt as well. And that is why experts don't expect interest rates to stay high for too long, too many years. They're going to have to go up for at least a year, maybe two, but they don't expect them to stay high for years with many S's there, for lack of a better term there, because the longer they stay high, the more the federal government has to pay on their debts and bonds and stuff like that. So, as rates go up, bonds are going to pay more money all around. Pretty much every type of bond that's not locked in, any new issued bonds and stuff like that are going to now start to pay more money, and the new spreads on bonds are going to start to pay more money as well. In fact, the bond market is just, basically shifting here by the day right now. So all that is kind of in play right now, and the Fed basically says they may have to raise rates faster to try to bring inflation down. Of course, we know that this is just one thing. If you watched my last video, there could be food shortages because of Ukraine is a major producer of wheat and corn and soybeans and multiple different, you know, they just literally have like millions of acres of farms in Ukraine that are now, in war. And think about that, and we look at what's happened with oil and gas from Russia and Ukraine as well, and look at what that has done to the price of gas and oil. And then now we look at what is going to, or it's already kind of happened to the price of food coming over from those countries. And remember, even if we don't get any food from those countries, just look at what it does to the price of food, the price of gas. We know it affects the whole market. We know this because we see what happens to the price of gas and the price of oil. It raises the price globally. We're a global market. I think everybody has realized that now from the price of oil and the price of gas. Remember, the price of gas for a gallon in United Kingdom and in Australia is about $8 a gallon. If you think the price of gas is bad here, it's $8 a gallon in the UK and Australia, and it's about $10 a gallon in Hong Kong. Yeah, so man, it could be a lot worse. Imagine if you lived in those countries. Yeah, like I said, it could be a lot worse. Not saying that I would want to be there or anything like that, but just imagine paying those prices, or imagine living in Ukraine. Also, other countries have much higher interest rates. For example, the country of Argentina just had to raise their interest rate to 44.5%. Remember, inflation is everywhere in the world. It's not just here in the US. Russia just raised their interest rate to 20%, while Argentina had to raise theirs to 44.5%. Imagine if you had a home loan and your interest rate was 44.5%, and that's what you were paying on a yearly basis. How could you even afford anything? I mean, I don't even, I couldn't even imagine basically losing half of your money every year to inflation. I mean, home loans right now, the average home loan's around like 4.5% right now. Not 40, not 44.5%. Oh my goodness. I can't, my mind can't even fathom something like that. It's just mathematically, I can't even contemplated. Meanwhile, we have multiple other lawmakers, governors, and senators and representatives here that are trying to help out as much as they can here. Virginia Governor Glenn Youngkin wants lawmakers to suspend the gas tax in his state for 3 months. The Virginia governor Glenn Youngkin estimates that the move would save drivers 26 cents per gallon of gas for 3 months in the state of Virginia. Yeah, Republican Governor Glenn Youngkin wants the divided General Assembly to pass legislation that would suspend the state gas tax for 3 months. He pitched the idea during an appearance at the Richmond area gas station. He said high gas prices are just part of the inflationary pressures Virginia families are facing. Yeah, and this is just the latest state here to propose trying to save money for their residents here. You can see here politicians propose giving people cash to compensate for high gas prices and inflation. So some states are considering stimulus checks, tax rebates to homeowners or renters. It says here from New Jersey to California, state lawmakers are mulling one-off rebates and tax credits to ease the pain of rising prices, as well as these gas tax holidays. High gas prices and large state budget surpluses are giving lawmakers from both parties an idea. Send people cash to compensate for rising prices at the pump. This is my favorite idea because giving people cash or checks, which is the same thing, is the best way to help people out. Studies have proven that. California lawmakers floated a proposal to spend some of the state's $45 billion budget surplus. That's a lot. On sending all California taxpayers a $400 check per person. So that would be $800 for married couples that, according to lawmakers, would pay in the amount of average California's, that would be the amount that an average Californian pays in gas taxes every year. So that could be coming here this year as well. Remember, Californians did have a state stimulus check last year as well, which was $600 and an extra $500 for if you had a child. We also could be seeing that in addition to these gas tax checks, whatever they're going to call them here. We could be seeing both of those here this year because they have so much money, $45 billion. But remember, California also has a lot of people. There was 27 million people that got the California checks last year. Earlier this week, New Jersey Assemblyman Edward Durr, a Republican from Gloucester, introduced his Gas Price and Inflation Tax Credit Act that would give a $500 refund to families, a check, and $250 to individuals in the state of New Jersey. Quote, gas prices and inflation are both soaring, which is making it harder for New Jerseyans to fill their tank and feed their families. New Jersey has a $10.1 billion surplus. That's a lot of money. $10 billion. Minnesota Governor Tim Walz has also suggested spending some of his state's money, $10.5 billion, on $1,000 rebates, which are checks. If you see rebate, just think check to families and a $500 to individuals. So $1,000 there. Yeah, so New Jersey has $10 billion and Minnesota has $10 billion, and they both have proposals. So Minnesota has a $1,000 rebate check to families. So basically, two people, a mother and a father, and $500 to individuals. So that would be for $500 per person. The New Jersey proposal would be $250 per person and $500 to families. Yeah, for New Jersey. California is $400 per person, $800 for two people. Yeah, so like I said, man, a lot of these states are flush with cash. $10 billion. California has $45 billion. And honestly, a lot of these states are growing in cash every month. They didn't get that way by accident. Some of them are just they're growing in tax dollars per month. So every month they're actually gaining a little bit as well. Remember, California sent out those stimulus checks last year to 27 million people times $600 per person or $1,100 per person, depending on if they had children. And if you do the math on that, I don't know how much money it is, but it's a lot of money. And then now they have $45 billion more. And don't forget, they had to run the budget for the state last year. Their budget was, I don't even know how many billions of dollars, but they spent all that money and now they still have $45 billion extra. Just as an example there, remember California is the largest state population wise by a long shot. They would be like the fifth largest country in the world by economy size. Yeah, so hey, we want all these states to give out stimulus checks. So New Jersey, Minnesota, Maine's got a proposal for one. Maine's actually upped it three. I think it's Maine. Maine's upped it three times. They went from $500, and then like, oh, let's give them more money. We got money there. Then they're like 750, and now they're like 850. Yeah, so let's have more and more states do this, and a lot of the larger states have this kind of money. They have this kind of money. So if you're in one of those larger states that are that type of size, New Jersey, Minnesota, that type of size or larger, your state's got money. Your state's got money. So don't be surprised if you don't hear something like that soon. Um, yeah. So especially if your governor's up for re-election this year, like we hear about the Florida governor. He's like, oh yeah, we passed a 1 month gas tax, and we're gonna wait 7 months to do it. Don't let that. That's not really that much for the state of Florida. They're probably sitting on. Florida's a really big state population wise. They're probably sitting on 10, $20 billion of extra money there. I mean, look at Florida. These other states are probably lower population than Florida, and they're sitting on $10 billion. California's sitting on 45 billion. So I would expect that that Florida has at least 10 billion. And they're like, oh yeah, we passed 1 month of gas tax reprieve for you guys, but we're gonna make you wait 7 months to get it. Yeah, they're getting a lot of criticism over that one. I mean, I could see if they gave it to you right now when people are actually hurting right now and gas prices are insane, but Florida should send out a stimulus check as well if they really want to make good on that one, like these other states are proposing here, especially their governors up for reelection. So let me know your thoughts here. But there's a lot going on here. And when I tell you these states are flush with cash, I mean, you read it right there. Almost most of these larger states, $10 billion or more. Smaller states, maybe 5, 6, $7 billion. Each state got at least $1 billion just from the third stimulus check package alone. That was really the minimum. This was for like the tiny, tiny states population wise. And I really didn't look into the exact amounts that each state got, but there's a lot of money there. So I'm going to keep you up to date here with everything. And remember, I just did a really good video on the federal level stimulus checks that have just been proposed. There's like 3 different ones, including monthly checks for everybody on the national level because of the price of gas and inflation. I'll link you to that video here in just a second. If you haven't subscribed to our YouTube channel, make sure to click the subscribe button down below. It's completely free to do so. This way you won't miss out on new videos. Remember, our new videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. Remember those times and tune in at those times every day so you don't miss out on new videos. After subscribing, click the bell icon next to the subscribe button so you get reminders when we go live with new videos. You can click here to watch my newest video next, and you can click here to see that video that I just did on the stimulus check proposals on the national level for monthly checks even. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.